Welcome back to Finpod, your daily financial digest. I am Evan, and we are here to break down today's market action. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get right into it. The conversation is dominated by some serious volatility in the tech and retail sectors. Supermicrocomputer is the name on everyone's lips, and not for a good reason. The stock crashed after the company announced a massive $7 billion equity and equity-linked financing plan to fund a growing backlog of AI server orders. Investors are clearly spooked by the scale of the dilution, sending shares down nearly 28%. Meanwhile, Oracle is also under pressure, sliding over 2% after hours. While the company reported record revenue, investors seem focused on the capital expenditure outlook and the pace of their cloud backlog growth, which is no longer accelerating at the breakneck speed we saw last summer. On the brighter side, Cracker Barrel is soaring, up over 22%. The restaurant chain delivered a massive earnings beat and raised its full-year guidance, proving that their return to traditional brand cues and new retail merchandise is finally resonating with customers. Casey's General Stores is also having a phenomenal day, jumping over 20% following a blowout fiscal fourth quarter that showed strong growth in both food and fuel sales. Finally, HROW Health is up about 7%, likely getting a boost from the relaunch of their pediatric eye care therapy, which is being positioned as a key growth driver. Turning to the broader market, it was a tough session across the board. The S&P 500 fell 1.6%, the Dow dropped 1.9%, and the Nasdaq slid 2%. The primary driver today was a combination of inflation anxiety and geopolitical tensions. A higher-than-expected inflation print rattled sentiment, and late in the day, news of potential military strikes on Iran sent investors fleeing for the exits, hitting the major averages hard as we approached the closing bell. In the world of AI, the narrative remains focused on infrastructure and potential economic impact. While the markets are cooling off on AI stocks due to valuation concerns, the industry itself continues to push forward. Anthropic made waves today by pledging $200 million to research the economic impact of AI on the workforce, highlighting the growing tension between AI-driven productivity gains and fears of job displacement. We are also seeing continued focus on data center capacity and chip demand, though the market is clearly becoming more selective about which companies can actually monetize this tech at scale. Looking at other stocks in focus, we saw a broad retreat in the semiconductor and hardware space as investors continue to rotate out of high-flying AI names. Outside of the big movers we already discussed, the defensive rotation we saw earlier in the week seems to have been overwhelmed by the late-day macro sell-off. Wrapping up our earnings watch, we had a few notable reports. CHWY posted a solid quarter with sales growth of nearly 8%, but the stock is down slightly as investors digest their lowered full-year sales guidance due to softer consumer spending. Core and Main saw shares drop over 6% after their results, while Icon shares fell nearly 5%. On the other hand, NAVN shares are holding onto a slight gain after their latest update. That is a wrap for today's market action. We saw a difficult day for indexes as inflation and geopolitical fears took center stage, while individual stories in retail and tech drove some significant swings in after-hours trading. If you enjoyed this episode, please like, share, and subscribe to the channel. Drop a comment if there is a specific stock or sector you want me to cover tomorrow. And for those looking for real-time trading signals, visit Fintwit.ai. Thanks for listening, and I will catch you all tomorrow.